Once we've defined our investment goals, we may look next to find a type of account that will help accomplish this goal. In this webinar, we summarize the features of each account type. We also review how to set investment goals and match them with an account type that makes sense. I'm joined today by my colleague, Ivy Hahn. Ivy, how's it going today?
Good. How are you, Ryan?
Well, not too bad, not too bad. So what's today going to look like with our conversation?
So a few different things that I wanted to maybe look at with our audience today, and that is looking at the different type of accounts at TD Direct Investing. And because our topic today is really about using the different type of accounts to determine, the type of goals that you can set in order to achieve them, but we're also going to be looking at, for example, a breakdown of those accounts. Not going to be able to talk about all of the account types, but at least some of the essential ones that I think our clients would maybe benefit from learning a little bit more about. And then as well, we are going to be going into determining the different type of investor profiles in terms of determining your own investing goal. And then at the very end, there is a Goal Assist app that recently came out, which we will do a quick demonstration at the very end to show everyone what it will look like and how you can actually use that to accomplish your investing goal. Yeah.
Well, I'm excited here. So let's start with the magical question. How do I really choose that type of account?
For sure. Yeah. So, Ryan, it really comes down to, and if I think about myself as well as our audience today, it really come down to four essential things. And of course, these are not the four things that you just have to consider. There may be other considerations, but I would say it really comes down to income. And that would be the first item on the list when it comes to choosing an account. And some of the questions that you may want to ask yourself would be, what's your current income status? Do you have any expected future income coming into the account? And essentially, it's going to determine how much investment or how much money you have for your investments. And then as well, specifically the investment amount. So asking yourself, how much do you have exactly for investing? That will be a key question nowadays, right? Looking at how much money you have for savings versus investing. And then if you do set up, in a little bit, we will talk about some of the retirement accounts. But if you do set up retirement accounts, is there going to be contribution limits that you have to meet on an annual basis? And then as well, time horizon. How long do you need access to these funds? At the end of the day, it really helps determine what type of investment that you would have, and of course, also investment style. So that would be the last thing to consider is what type of investments or products or even strategies you wanted to get yourself into within those accounts. Each of the account would offer some sort of what we call benefit. And you as an investor, you would want to make sure that you're picking the right products essentially in order to meet your investing goal.
Well, that's good. And I know you mentioned before that we weren't going to talk about all the accounts, but can we give maybe clients, can we give our audience just maybe an idea or a taste of which accounts are available here at TD Direct Investing?
For sure. Yeah. So what you have on the page here, Ryan, is just a list of some of the account types that we have. So that would include cash accounts, margin accounts, which we'll go into a little bit detail explaining what they are. As well, there are some retirement, what we call retirement saving accounts. So that would include tax-free saving accounts, registered retirement plan, registered education saving plan, etc. So all of these account types are available to open at TD Direct Investing and also include, not from the actual slide, but we also have, for example, corporate accounts, joint accounts, trust accounts, as such that you can actually open at TD. So yeah, so quite a long list of accounts for different investors and different profiles and to consider.
Well, exactly. Well, let's boil it down. I overheard a couple things that you mentioned, and I want to call you on those. You mentioned registered, and I'm assuming there are non-registered. So what's the difference here? Or give us some examples of, let's start with non-registered. What does that mean? And Let's have some examples of those.
For sure. Yeah. So when it comes to the difference between what I call, when we're using a lot of financial lingos here, but we'll break it down for everyone who's tuning in live today. And when we talk about what we call non-register accounts, just giving everybody an example, we're really talking about accounts like cash versus a margin account. And essentially, what they are is it comes down to you can call it the type of benefits that it can provide for clients, essentially. So, for example, when it comes to a cash accounts, clients who set it up, you're able to invest stocks, mutual funds, exchange traded funds, fixed income. And then, as well, with the cash account, the benefit is that it is cash that's settled. So, clients essentially use their own cash to invest, and you're able to open up joint accounts as well with anybody in your household. And then the part that makes it what we call non-registered is that all of the investment gains that you make within the account are going to be subject to tax. So at the end of the year, you are going to be receiving tax documents if you do make any investment gains in your account. And as well, some of the additional features also would include things like dividend reinvestment plans. So for any investments or any, for example, stocks or exchange traded funds that you receive dividends for, you can set up dividend reinvestment plan with us, so the dividend gets reinvested. And then as well, you can also set up what we call systematic investment plans on mutual funds. Those are also available within a cash account. And switch gear a little bit with margin account, it is a little bit similar because it is, at the end of the day, it is still a non-register account that carries some of the similar benefits. So things like you're able to invest in stocks, mutual fund, exchange traded funds, fixed income, all of those investments that we mentioned before with the cash account. It's also similar in margin accounts. And then the best part with the margin account is that you can not only use your own cash for those investments, but you could also borrow money to invest. Now, if anybody is interested, they could always log on to the website and find out a little bit more about the account opening process and, of course, eligibility of opening a margin account, because there is a certain type of requirement that's needed. For example, a credit check, such and such. And then the last two things are the investment gains are also going to be taxable. So if you do make any investment gains and you did, for example, make money in the account, at the end of the year, you do have to pay taxes to the CRA for those investments. And then as well, you can deposit and withdraw at any time. So if you need money from your margin account and as well as from a cash account, you're able to take out the money right away and be able to receive that money into the account that you like. Yeah.
Yeah, that's pretty convenient. And again, a lot of those magical words that kind of went off in my head in regards to whether it's a cash account or it's a margin account, the investment gains are taxable and something we have to keep in mind. So these are non-registered, if I remembered correctly. Sure. Now let's move on to registered. So what does registered mean? And can we get some examples of registered accounts?
For sure. Yeah, just to give everyone, once again, our audience, an example here. Now, these are not all of the registered accounts that we have, but just to give everyone an example of two of the most popular types that people tend to set up. And once again, it has nothing to do with our choice. It really, at the end of the day, is based on individuals' risk tolerance, their financial goal, essentially, to be able to set those accounts up. And for example, if we're looking at an example of a register account, that would include what we call a tax-free saving account, a TFSA, some people like to call that, and an RSP account, which is a retirement savings plan. And the primary purpose with these two type of accounts are, I would say, somewhat similar, but yet different. So for a TFSA account, the primary goal is really just for anybody who wanted to maybe save for any type of investment goal, or even just any short-term, long-term, medium-term goal that they have. And the eligible investments would also include stocks, mutual funds, exchange traded funds, fixed income, so very similar to a cash and margin account. And with any of those registered account, the key is there is going to be a contribution limit that if you were to open up, you do have to meet every year. So in case of a tax-free saving account, there is going to be, give an example of this year, the annual contribution limit is $6,000. And an individual who opened it up would be able to put that dollar amount into their tax-free saving account and be able to invest in all of those investments as mentioned. And then as well, the contributions that you make into the account is not going to be tax deductible, but any of the unused contribution room, let us say if you do not put any money in your tax-free saving account, next year that contribution room can be carried forward and you're able to make that contribution again. And as well, the top benefit, which I think is very important to note, is that with a tax-free saving account, any type of investments, capital gains, dividends, interest would actually grow within the tax-free saving account tax-free. So that's where the name comes from, is tax-free saving account. Essentially, the investment gains that an individual would make within the account would grow tax-free while it's within the actual account. And even if you're considering, taking it out one day, that investment gain or any of the portion that you take out, whether it's the original investment amount or the amount that you accumulated or gained, it's still going to be able to allow you to take it out tax-free, essentially. And then switching gear to the RSP account, is that RSP account, as we said, the primary purpose is really for anybody who maybe wanted to save for their retirement, even for shorter term, or ideally would be for a longer time period, because it is for the purpose of saving for retirement. However, you could use an RSP account for any other investing goal or purpose, and eligible investments would include stocks, mutual fund, exchange traded funds, so very similar to a TFSA account. And then as well, it is subject to what we call an annual contribution limit. It is a little bit different from a TFSA account, where for an RSP, an individual would have to be able to meet that 18% of previous year's earned income, less pension adjustments, as their actual contribution limit. And if at this point, if our audience are thinking, okay, well, I don't know what my contribution limit is, the best way is really for you to actually log on to the CRA website. And for both TFSA and RSP accounts, you're able to know exactly how much you're eligible to put into your RSP or TFSA account. And then with any contributions that make into the RSP account, it is tax deductible, meaning you're able to use that against filing for your taxes towards the end of the year. And then, of course, any unused contribution room can also be carried forward, just like a tax-free saving account. And then, as well, the investments will actually grow. And this is actually the part that's a little bit different from a tax-free saving account, is that the investment will actually grow tax deferred until you actually have to withdraw it. So what that actually means is the investments will actually, while it's staying within the RSP, it's going to be able to, for example, grow into a bigger, maybe a larger account. But eventually, when that individual would have to take it out, that's when the actual taxes would actually be applied at the individual's marginal rate. But while it's staying within the RSP account, there is no taxes involved. And the best part is, and I will mention this just in case if anyone doesn't know the full benefit of an RSP account, is that you can use this for two different types of plans. And one would be what we call the home buyers plan. So this is really for anybody who have money in their RSP account and they're hoping to take it out for the purpose of purchasing their first home. And you're actually eligible to take out the money from the RSP tax-free. And then the other plan is called the lifelong learning plan, where if you're thinking about maybe pursuing a full-time education for yourself, your spouse, or even a partner, you're able to do so by taking out money from the RSP account tax-free as well. So those are the benefits.
Those are really interesting programs, and it's a good leeway onto where we're going. I mean, you talked about the home buyers plan, and part of setting goals is sometimes setting a goal to buy a house. And the lifelong learning plan, part of our goals is maybe saving some money up for education for ourselves. So why don't we switch over and get to setting those investment goals, so then we can really choose the perfect account. So when we go ahead and choose those goals, I mean, what are some of the questions that we have to ask ourselves when we get started with this goal planning?
For sure. So when it comes to setting an investment goal, now what we often say, and I think you may want to, you probably would agree, Ryan, by in some of our classes, we even say there are not just this not just applying to investments, but there are many different questions that you should be asking yourself, or an individual should be asking themselves before even setting up an account. And those questions would actually include questions like, what are your priorities? What are you hoping to accomplish in terms of investment or even savings plan, or just any type of plan that you would have in life, essentially. And as well as how much money, if it's for investment, how much money do you actually need to accomplish that specific goal? And that would also involve things like how much time do you have in order to achieve a goal? Because at the end of the day, the type of time frame would determine the type of risk that maybe you're willing and able to take on, and of course the type of investments that you're able to make and invest in your portfolio as well. And consider things like how long would I basically need to stay invested in the markets in order to achieve those goals? How much risk am I willing to take? So risk is sometimes a very, I guess, a difficult thing to consider, but you also have to consider, are you able to mentally and physically tolerate the risk in order to achieve the investment goal that you have? Because certain type of investments would have different type of risk levels. So an individual, for example, me versus Ryan, we may have different risk tolerance that would determine the type of priorities or goal that we have, and the type of accounts or even the type of investments that we choose in our accounts. And then lastly, how do you measure your progress? So oftentimes we need to check on our investments in order to make sure that we're staying on track. And the questions that you would need to ask yourself would be, how long do I need to check my account, or how often do I need to check my account? Do I need to relook at my investments every so often to assess suitability? As we know that goals will change, and your financial situation will evolve over time. So it's important to look at all of those things, or ask yourself before setting maybe an investment goal or investment plan.
Oh, that's great. Those are really nice questions, and it's a good list to have. Now, let's go in a little bit deeper with those questions. I want to get to one of those questions, which is, how much time do I have? Talk to me a little bit about time horizon and long-term and short-term goals.
Absolutely. So when it comes to, and it's very important, I would say, to get out for our audience today, is that goals are not, good just for today, right? So goals are always good, regardless of whether you're setting it for investment purposes or even just setting goals in life. So there may be, for example, what we call short, medium, and long-term goals that you would want to set for yourself, and it really comes down to the key thing is that essentially would help you decide what type of account and investment that you may want to achieve, or you would want to have in order to accomplish these goals. So for example, when we look at short-term goals, what we say is short-term goals are usually shorter in nature, perhaps even goals that you have that you wanted to accomplish under a year time frame. So they're usually narrow in scope, and some of the examples would include things like establishing a budget. You may want to set up a short-term goal, like you wanted to maybe reduce your spending, or even setting up emergency fund, which would be good for the next 60 days, 90 days in case of any emergencies or loss of job. Those are great for short-term goal examples, but of course, it really depends on the individual. You may have other things that you wanted to consider as well. But then when we switch to the medium-term goal, this would actually be a little bit longer in time frame. So we're now looking at maybe a stretch of 3 up to a 10-year time frame, and perhaps even things like making bigger purchases, or goals would include generating additional income. So think bigger and longer time frames. So those will be the items that may take longer for an individual to realize. So, for example, if you wanted to eliminate debt completely, that may take longer depending on the individual, or even saving for education, whether for your kids, maybe even grandkids. That could be maybe a longer type of goal that you would want to set. Or even a house down payment, dream vacation, really depends on the individual and how long it takes for them to achieve that goal. And then last thing is long-term goals. So this is what we say, if you are able to set long-term goal is typically longer in time horizon, so it may even take longer than 10 years for that goal to be realized, and that would include things like comfortable retirement. How much do I need for retirement, and am I really looking at saving for retirement right now, which would be about 20 or 30 years down the road for some people. And then as well, things like living completely debt-free, or setting up a estate, right? Or setting up a will. So those could always be maybe a long-term thing that you would consider as an individual. But once again, with having said all of this, every single individual would be different. So they could have maybe a different type of goal and plan for each of the time frame.
And you bring up a good point to finish that, and to go on to another item that you mentioned before. Every individual is different, and every individual has a different risk level, or what we like to call that investor profile. So tell us a little bit about determining that risk level or investor profile, Ivy.
For sure. Yeah. So having said all of this, it really brings down to, I guess, the essential question that we need to ask ourselves as an investor, right? So, if I think about myself and you as well, Ryan, what are some of the key questions that we should be asking ourselves once we set up that investment goal? So it could be things like investment objectives. So that would include is there any other additional maybe considerations that you need to consider? Things like, am I maybe looking to invest maybe for the purpose of generating income, or am I just investing because I am maybe looking after a bit of a long term, so saving for retirement, I'm going after safety. So those are things that would fall under investment objectives. And then as well, also consider time horizon. So what is your time horizon? When would you need access to the money from your investments? And risk tolerance. So what we have mentioned a little bit more about risk tolerance a little bit before, but the key here is really based on your investor profile. And you have to consider that different type of investment would carry and vary in different risk levels. So that is the key here. And every individual's risk tolerance would be different. So that's why we say it's very important to consider these before even looking at the different type of accounts that we have at TD, or the different type of investments. Because essentially investments, what we say is investments with higher returns, typically, not always, typically would involve greater risk, and you have to consider what level of risk are you willing to take. So always consider your risk return profile, because it would impact your time horizon as well as the investments that you pick. And then as well, the last two things are also equally important, would be the investment approach that you take. So based on your time horizon, how are you going to respond to market volatility or fluctuations? Do you have maybe a plan to get out of certain situations if there is maybe, for example, any sign of a market decline? So these are things that you have to consider for your portfolio. And the last thing is assess your current portfolio and your current situation. So, what is your current net worth? Maybe you already have an RSP account set up to realize or maybe to achieve your financial goal of retirement. Or maybe you've got a tax receiving account set up already to make those investments. So all of those things are important, but at the end of the day, you have to assess your current situation to make sure that you're always on track to basically achieve your goal and to determine, what your investor profile is.
Of course. And Ivy, I'm going to ask you a favor. Could you, for our audience, maybe give us maybe an example or a couple of examples? I know there are a lot of different investor profiles, but can you give us a couple examples of some investor profiles just to kind of put it into perspective?
For sure, yeah. So the key question, I guess, to ask, and if you wanted to maybe take a look at what type of investor you are, and these are once again not a full list of profiles that you would consider. So some of these profiles you may find yourself, falling in between, one and the other. But essentially, what we say is these are just examples of how you can look at your investor profile from a perspective of risk tolerance. So, for example, when we look at risk profile for maybe a conservative investor, the risk level could be anywhere from low to moderate. So, what that means is you may not be able to tolerate a lot of risk. Perhaps you're looking for, a lower investment gain, and if that's the case, then the investment breakdown could look something like 70% safety and income, because your risk level is considered low and moderate, and 30% maybe in growth related type of investments. And then what we always say is that time horizon could even be short term, because a lot of times, if you're hoping to achieve higher investment gains, that may perhaps involve more time. You may have to wait it out a bit longer. But for a conservative investor, this is something that one can actually look at. And then when it comes to for example, what we call a moderate investor. So this is moving up the dial a little bit. This is where the risk tolerance or risk level involved could be a little bit higher. So for an individual who may able to take a little bit, I guess, of a higher risk, so risk level could be moderate to high. You could actually consider having maybe 60% of your portfolio in growth related type of investments, and then maybe perhaps a smaller amount, like 40% in safety and income type of investment. And of course, the time horizon, once again, is it could be anywhere between 3 to 5 years or even longer, depending on how long it takes for that individual to achieve a goal. And of course, the type of percentage of return that you're looking for, essentially. And then the last example would be an aggressive investor. So this is really on the higher end, where if you consider yourself as someone who's able to and willing to be able to take on a lot of risk, then perhaps you may want to consider putting your portfolio into 90% growth type of investments, and then 10% in safety and income, where it perhaps would be suitable for anyone who may have a little bit more of a disposable income. You may have even a longer time horizon in order to wait out these volatilities or even what we call fluctuations in the market. So the time horizon could be even longer, because generally speaking, you may be able to take on a little bit more risk, and in order to basically achieve that type of gain that you're looking for as an aggressive investor.
Well, thanks so much for those wonderful examples, the wonderful explanation how people can determine their profile. I think our audience deserves to see some of the tools that can help them in doing this. Let's take you through Goal Assist, one of the tools that can help you create those goals and find the type of account that will help you with them. Let's check out this demonstration. On your mobile device, let's tap on Goal Assist. Let's log in. So the first thing that we're going to do is we're going to create our goal. what are we investing for? We can put in retirement, a major purchase, or just plain my money to grow. Let's tap major purchase. And let's think about a down payment on a home. We indicate our current age, the amount that we'd like to invest or actually save for in this case, which is the down payment of the home. Let's put $25,000, for example, and we'll put the target age. Let me put 35. So that would be 5 years. That would be my time horizon. And let's put down payment here. Save and continue. It's now time to choose our investor profile. Now, we spoke of this before. If you'd like to know a little bit more about investor profiles, go ahead and tap watch the video and know a little bit more about that. So we have conservative, moderate, aggressive, and even one that we can customize ourselves. But let's choose one of the pre-done investor profiles, such as conservative. If I want to know a little bit more about that, I'll tap see full details, and it'll explain to me what this investor profile is all about. It will give me some historical returns of the best year, worst year, and average year, just to give me a sense of what could happen in my time horizon. It will also talk about an asset mix that may come together with this conservative profile that I may consider. If I'm okay with this profile, I'll tap Choose Profile, and my investor profile has been chosen. Save and continue. Let's link this goal to an account that we have at TD. We can then add any additional investments that we might have sitting in other accounts, not this one here. So for example, let's say I've already got $5,000 sitting in another account for this goal. And then I'm going to specify, well, how much am I planning to contribute annually towards this goal? So let's say we're going to go with about $200 a month or $2,400 a year. Save and continue. And now the Goal Assist app will make a projection of where it believes we will be with our goal in that 5-year span, taking into account the investor profile that we chose, how much we're able to invest over that time horizon. And it looks like we're a little short on this goal in regards to this projection. So what we can do is we can adjust some of the factors that bring this projection. For example, I could adjust my contribution annually, my target age, maybe I want to push my time horizon a little bit, or the actual amount. Let's change the contribution annually. Let's maybe put it to $3,600 a year and recalculate. By doing that extra $1,200 a year, it looks as though it gets us closer or actually right on to our goal as projected. If I'm okay with this, I'm going to tap Start with a Plan. You can also always change the investor profile if you choose to go a little bit more moderate or aggressive. But for this short-term goal, we might choose, in this case, conservative. Once we have our goal sitting right here on our dashboard, we can tap Find Investments, and now it's time to choose how we want to invest. If you want to know a little bit more about exchange-traded funds or exchange-traded funds and stocks, just tap on that watch video and you'll know a little bit more. You can review how you're doing with your goal when you log in to the app just by tapping Goals and see where you are by revisiting this particular goal. And that's one of the ways we can create goals using one of the tools here at TD with the Goal Assist app.
Wow, Ryan, I'm glad that you're able to show our audience what that Goal Assist app looks like. I think it really helped looking at determining some of the investor profiles that we were talking about earlier, as well as maybe helping our audience determine the type of accounts that they may choose for these investment goals. So thank you, Ryan.
Well, thank you, Ivy. Thank you for being here. And I know that people learned something today and are on their way to their goals and choosing the right type of account. So thank you again.
Oh, you're welcome.
And for those in the live session, we now move on to questions.